This is the video I've been most excited to make because I want to break down clearly and in detail the biggest myths people keep repeating about safe banking and offshore banking. And the problem is simple. A lie repeated 1, 2, 10, 100 times starts to feel like truth, even when it's not. So in this video, I'm going to walk you through the most common myths I hear every single week and why believing them can cost you time, access and in some cases a lot of money. I'm Matteo Maglia, Partnership Manager at GloboBanks, the banking introduction company for international accounts. Let's start immediately. Myth number 1. Digital banks open an account in 5 seconds are safe. This is the first and one of the most dangerous logical fallacies. People think it was fast, smooth, no friction, so it must be good. No. If you can open an account in 5 seconds, that should trigger giant red flags, not comfort, because what it usually means is the institution is optimizing for volume, not quality. They want more users, more balances, more transactions, and they're willing to onboard quickly to get them. And here's a rule that never changes in banking. You don't want to place your money where they need your money. The safest banks, the highest quality banks are the ones that you don't need your deposit, have too many applicants and can't afford to be selective. That's actually the best position to be in as a client. You're applying to a bank that doesn't sell accounts, it chooses relationships. Now, of course, the problem is if you apply the public way, you risk being rejected, and that comes with consequences. But I'll keep that topic for another video. For now, just remember, fast onboarding doesn't equal safe banking. In many cases, it's the opposite. Myth number 2. Switzerland is no longer safe because banking secrecy is over. This is another classic logical mistake. People confuse privacy with security. Yes, privacy has changed over time. Switzerland used to offer something closer to pure anonymity in certain contexts. Today is different, but privacy and security are not the same thing. Switzerland can have less anonymity than decades ago and still remain one of the safest banking jurisdictions on earth. Because security is not about nobody knows. Security is about legal stability, institutional strength, banking culture, decades or centuries of track record, and systems designed to protect assets properly. And here's a reality check. Many of the biggest legal entities on the planet, countries, institutions, ultra-wealthy families, major corporate structures still use Switzerland. That creates a kind of rarity when a jurisdiction holds massive amounts of global wealth. There is a strong incentive globally for it to remain stable, protected and functional. Same logic applies to places like Singapore and other major wealth hubs. They've built a model around attracting serious capital and they protect that model. So again, privacy is separate conversation. But if we're talking about banking safety, jurisdictions with deep banking heritage, institutions that have existed for 100, 200, even 300 years are a different category. Myth number 3. You need millions, like 10, 50, 150 millions to open a top-tier banking relationship. False. And this one surprises people the most. Here's why. You need to compare your deposit to the assets under management of the bank. And those numbers are public. Go check the top Swiss banks or top private banks in major apps. Many manage 300 billion, 500 billion, 700 billions, sometimes more. So your 10 million, while obviously a lot of money in real life, doesn't not move the needle for them. It doesn't automatically make you important. What changes everything is not the size of the deposit, is the quality of the client. Banks ask a question like, is this a long-term relationship? Does this client fit our risk profile? Does the source of wealth and activity make sense? Is this client aligned with the bank's services, investments, custody, lending, structured solutions? Are they building something generational? Because the top banks already have money. They don't need your money. They need the right clients. And I've seen this scenario too many times. A person can walk in with 10 millions and get rejected because the application is poorly framed. The profile is positioned badly or the bank sees them as a high risk. low value. Meanwhile, someone else introduced it properly with 100k, 200k, 300k can be approved because the profile is clean, correctly structured, and fits exactly what the banks wants. So if you think I have money, they will accept me, you're playing the wrong game. Myth number 4. Foreign bank accounts are extremely risky just because they're outside my country. This isn't just a logical fallacy, it's a security mistake. Let me explain. People feel safe when their bank account is in the same country where they live. But in practice, that can be more dangerous because that's the jurisdiction where your daily life produces risk. Even if you do everything correctly, life happens. A legal dispute, a civil claim, a misunderstanding, a compliance review, an administrative freeze, a court order, a local investigation, and suddenly the account you rely on is frozen. In many countries, an account can be locked fast, and then you spend months proving you're right. Now, imagine the same scenario when all your money is in the same jurisdictions where you live and operate. That's a concentration risk. Having money outside your country of residence is often not dangerous. It's intelligent diversification and asset protection. And there's another practical advantage: remote management. If you hold an account in your country of residence, many banks feel entitled to demand you show up in person. And if you're traveling, say you're in Bali, and your bank says come to the branch, you can't. So what happens? Account stays blocked until you return. That's a nightmare. But if you're a non-resident client of a bank in another jurisdiction, that bank cannot reasonably expect you to show up in person. They're already set up to deal with you remotely, and that's a major advantage. This is also why many serious entrepreneurs have at least 2 accounts: one day-to-day operational account and one or more reserve safety accounts in other jurisdictions. If we're talking about meaningful wealth, 2 accounts is often the bare minimum. A simple framework could look like one operational account with, say, 10% of your liquid funds and 2 other accounts in different jurisdictions holding the rest. That's how you reduce single points of failure risk. Myth number 5. A famous mega bank automatically means better treatment and the best choice. This myth causes a lot of pain. People choose banks like they choose brands. They rank them by fame. This is the biggest name, so it must be the best. But big and best for you are not the same thing. Take Switzerland as an example. A mega bank can be great, but it's built to serve everyone. Retail clients, mass affluent clients, corporate clients, wealth clients, everything. When you serve everyone, it becomes harder to deliver a truly tailored experience for specific high needs profiles. Meanwhile, certain private banks, sometimes less known to the general public, can offer dramatically higher quality of services for high net worth individuals. Faster responses, real relationship management, better continuity, higher competence on complex profiles, and an experience that feels like first class instead of economy. So, if you qualify for a high quality private bank that is specialized, you can be treated 10% better than in a mega bank, even if the mega bank has a bigger balance sheet. And you can see the same pattern with mid-level wealth. A lot of people chased a famous brand in certain jurisdictions because deposit thresholds looked low at the start. Then later, the bank changes strategy, raises minimums, and starts exiting clients they no longer want. Result? People stuck in account closures, long delays, blocked access, slow email chains, no relationship manager, no support. And that's what happens when you pick a bank for the logo instead of for fit. The right question is, where can I be calm, stable, and supported with a bank that actually wants my profile? Not which bank name sounds the most impressive. Myth number 6. The money is in my bank account, it's really mine and it's safe. This is one of the most misunderstood concepts in banking. In many standard bank account structures, the deposits become liability of the bank, meaning you are a creditor of the bank. So if the bank fails, you rely on deposit insurance, and deposit insurance is limited. That's why in many places you'll see coverage like up to 100,000 or up to 250,000, depending on the jurisdictions. Now imagine you had $1 million on deposit, insurance covers 100k. What about the other 900k? That's where things become very uncomfortable very quickly. And yes, sometimes banks get rescued, sometimes they're acquired, sometimes governments intervene, but you never want your security to depend on a bailout. In certain structures and jurisdictions, there are ways to hold assets in a way that maintains stronger legal separation and protection, and that can be a huge advantage in terms of true security. So these are the myths that trap people again and again. Speed doesn't equal safety. Privacy is not the same as security. Millions don't guarantee access. Foreign accounts aren't dangerous. Concentration is. Famous banks don't automatically give you the best service, and deposits are not always protected the way people assume. If you want to understand what the best banking setup looks like for your specific profile, jurisdictions, account types, diversification strategy, you can book a free assessment call via the link in the description. My team will analyze your situation and tell you which institutions make sense, what the realistic requirements are, how the process works, and how to approach it in a way that maximizes approval and long-term stability. And most importantly, how to build banking relationships that let you sleep well at night. Let's see in the next video.